Do you love the idea of earning dividends on a monthly basis? There's just something special about seeing that dividend income hit your account each and every month. There's a number of ways to do this. You can invest in a monthly paying ETF. Take JEPI or JEPQ, for example. Those are two monthly paying ETFs that we looked at in the video right before this one. Another way to do it is by investing in a monthly paying dividend stock. For example, Realty Income pays their dividend each and every month. After all, they coined themselves the monthly dividend paying company. And lastly, you can invest in quarterly paying dividend stocks, but these dividend stocks pay on different months of the year. For example, stock A pays in January, stock B pays in February, and stock C pays their dividend in March, and then the process repeats itself. So 3 dividend stocks, and you're still earning dividends each and every month. And in today's video, we are going to look at 3 dividend stocks that pay quarterly dividends, but they pay on different months. And you will be receiving a dividend each and every month with this simple 3-stock portfolio. And the best part is, besides earning dividends every month, is they're all blue chip dividend paying stocks trading at great valuations. If you're excited about today's video, do me a huge favor. Click that like button down below, subscribe to the channel, and let's get started. Hey everyone, Mark Russin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me take a quick moment to thank today's video sponsor, which is The Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks right now. Now let's get back to the video talking about 3 blue chip dividend paying stocks that will have you earning a dividend each and every month. Let's begin with dividend stock number 1, which is JP Morgan, stock ticker JPM. JP Morgan is the largest US bank in terms of total assets, having $3.7 trillion in terms of total assets. The company currently has a market cap of $415 billion, and not only are they the largest US bank, but they have also been one of the best performing banks over the past 12 months, as the shares are up 22% over that period. There has been a lot of turmoil within the banking sector here in 2023, especially within regional banks, as we have now seen 3 sizable regional banks fail just this year alone. One of those banks that went under was First Republic, to which JP Morgan scooped up their assets for a very favorable amount, $2.6 billion, which was essentially the one-time gain that the company booked. JP Morgan operates within 4 major segments: consumer banking, investment banking, commercial banking, as well as asset management. Although the rise in interest rates has put a strain on the economy, as the Federal Reserve has hiked rates over 14 consecutive periods now, but what this does for the banking sector is it increases what's called their NII, or net interest income. And this is really the difference between the income they're receiving on loans that they give out compared to interest they are paying. Think of something like your savings account. Their loan rates are rising at a much faster pace than they are rising their savings accounts. So that allows more NII for the banking sector. JP Morgan is looking for NII of $81 billion in 2023, and this was prior to the First Republic acquisition, which is now supposed to be accretive by $3 billion in terms of NII through 2023. In terms of the dividend, JP Morgan pays an annual dividend of $4 per share, which equates to a dividend yield near 3%. The bank has a low payout ratio, slightly below 30%, and over the past 5 years, investors have enjoyed an annual dividend growth rate of 13%, making JP Morgan a dividend growth stock. As you can see here on this chart, JP Morgan pays out their dividend every January, April, July, and October. Now let's take a look at valuation, because after all, we never want to buy a stock based on yield alone, and we definitely don't want to buy a stock just because of the month they pay out their dividend. It all comes down to valuation, and JP Morgan is expected to generate EPS of $14.50 in 2023 according to analysts' expectations, which equates to an earnings multiple of only 9.8 times. So you have the largest bank in the US trading in single digits, which is quite low for a stock that is traded at an average multiple of nearly 12 times over the past 5 years and 12.4 times over the past decade. So a really intriguing valuation standpoint right here for JP Morgan. Dividend stock number 2 is Starbucks Corporation, stock ticker SBUX. Starbucks Corporation has built quite a brand over the years. They are more than just a coffee shop now. They are a luxury. People love carrying around their Starbucks cup. And the loyalty from their customer base, I want to say, is second to none. But then there's Apple fanatics. So we'll just say second. Starbucks currently has a market cap of $114 billion. And over the past 12 months, shares have been on fire, up nearly 40%. But they have stalled out so far here in 2023, as shares are actually down 1% thus far, falling nearly 7% over the past month. Why is the company under pressure of late, you might ask? Well, the US is the largest segment for the company, but the second largest segment for Starbucks is China. And in Q2, the company recently reported US same-store sales growth comps of 12%, which was solid, but China only grew 3%. Since the beginning of the year, China went away from their pandemic restrictions, which many had hoped would drive the stock higher. The stock price baked a lot of the growth in as the shares price climbed to $115 after sitting at around $70 in June of last year. Once the company reported their Q2 earnings, it saw this slower than expected China growth, and a lot of investors had baked in a much higher expectation. And more data also came in outside of just Starbucks earnings that showed the growth in China has been much less than expected. This resulted in the shares plummeting on the backs of their Q2 results and more economic data. The company is ultra focused on this region. They're still continuing to grow, believe it or not, here in the US, but in China, they expect over the next 3 years on average to open a new store in the China region every 9 hours. Starbucks has long been a printing machine when it comes to free cash flow, which has allowed them to increase their dividend at a strong rate over the years. Shares of Starbucks currently yield a dividend of 2.2% with a 5-year dividend growth rate of 12.5%, which is actually slower than in years past as the company has had to deal with the pandemic the last few years. Starbucks management has increased the dividend for 12 consecutive years and counting. Starbucks pays their dividend on the months of February, May, August, and November. So you have JP Morgan, which we just looked at. They paid us a dividend in January. And now the very next month, Starbucks is paying us a dividend in February. So we've now received dividend payments in both months from 2 different companies. Now for valuation. Are Starbucks shares a buy, sell, or hold at the current valuation? Well, analysts are looking for 2023 EPS of $3.43 per share, which equates to an earnings multiple of 28.9 times. Growth is expected to return to the company with 16% growth expected in FY23, followed by 19% growth in FY24 and 17% in 2025. Over the past 5 years, Starbucks shares have traded at an average of 31 times and 30 times over the past decade. So today's valuation does look intriguing, but with the growth expected the following years, the valuation looks even cheaper. Dividend stock number 3 is Pfizer, stock ticker PFE. Pfizer has been at the forefront and in the news a ton over the past few years as we went through the pandemic, as they had one of the leading vaccines around for US consumers and around the world. The company currently has a market cap of $227 billion, and over the past 12 months, shares of PFE have fallen more than 15%. With all of that coming in 2023, as year-to-date, the stock has been under intense pressure, falling more than 20%. One of the reasons for the decline has been due to the decline in revenues, as well as earnings, which is really just solely based on the pandemic revenues coming down. In addition to that, the company is also facing a patent cliff, much to the likes that we've talked about on this channel before of one of my favorite dividend stocks, which is AbbVie, as they faced a patent cliff with their best-selling drug Humira. Pfizer has that same thing with a number of their top-selling drugs in the coming year. However, the company does expect the pandemic-related sales to bounce in 2025 as they are in process of creating a flu and COVID vaccine that will be a combo shot moving forward. In addition, the company has a strong pipeline of new drugs, many of which will be rolling out in 2024 that will help offset some of these patent cliffs that they're facing. One of those new drugs that is rolling out is focused on RSV, which has been a hot topic within the media as the company recently received FDA approval for older adults. All of this is normal within the pharmaceutical sector. You have these breakthrough drugs that you have exclusivity to for a number of years, have patent protection, but then that patent comes to an end and generic options are able to come on market at a much cheaper price. It is a revolving door that many of these pharmaceutical companies are well aware of and have dealt with for a number of years. With all that, the company still continues to generate strong free cash flows that supports a very high dividend yield, the highest on the list that we're looking at today. Pfizer currently pays a dividend yield of 4.1% and has a low payout ratio below 30%. Over the past 5 years, the company has increased the dividend by 5.3%, and the company has increased that dividend for 12 consecutive years. In terms of payment, Pfizer pays out their dividend in the months of March, June, September, and December. So now we have received a dividend check in January from JP Morgan. We received a dividend check from Starbucks in February, and now we get dividend income in March from Pfizer before we restart the process again with JP Morgan the very next month. In terms of valuation, analysts are looking for Pfizer to generate 2023 EPS of $3.35 per share, half of what they did the prior year, largely due to the loss in pandemic-related revenues, which equates to a 2023 earnings multiple of 12 times. Over the past 5 years, for comparable purposes, shares have traded at an average multiple of 13.7 times, which is also in line with where the stock has traded over the past decade as well. So there we have 3 quarterly paying dividend stocks. JP Morgan's going to pay you in January, Starbucks is going to pay you in February, and Pfizer is going to pay you in March. And then we're going to restart the process all over again, and then you're receiving dividend income each and every month. That's the best part. But the second best part is all 3 of these blue chip dividend paying stocks all appear to be trading at great valuations. I hope you enjoyed the video, and in the comment section down below, let me know, do you receive dividend income each and every month? It's just a yes or no right there. And if you haven't done so yet, smash that like button down below, subscribe to the channel, and we'll see you in the next video. Take care.